Today we are looking at American Airlines and the cryptocurrency Ethereum Classic. Plus, I got a really great rant for you guys too. Stay tuned. Hi, this is Tim from TradingStrategyGuides.com. Welcome back to our channel. Today we'll be looking at an ascending triangle on American Airlines Group, Inc., and a descending triangle on the cryptocurrency Ethereum Classic. And I'm going to rant a little bit about the pound Kiwi trade. But first, we got a few active trades to check out. And later on this week's Trading Maxim, happy Monday, everybody. Hope you guys had a great weekend. Let's catch up on the active trades. Those of you on the Comcash Alerts app know that the Great British Pound New Zealand Dollar annoyed the stuffing out of me this week. On Monday, it made this huge spike right here and went, whoa, up above $2. Except it didn't. My broker did not have that spike, and I did not hit the first target. So I got up to here, and then as you can see, it just went right into the toilet. Then somehow I missed this close right here and ended up closing late on Thursday. So I took a way bigger loss than I should have. Anyway, that stuff happens, so I'm fine with it. I just need to be more attentive to deal with this kind of thing. And there are other things that we can learn from this trade. Now, I have been considering adding a rule to shut down a trade when we get a spike up here near the target, like this right here, with volume. You see all that move came with volume, so that was momentum for sure. But then it never hit the target, and then of course it dropped. Now, I've seen this happen quite a bit, and I'm sure you've heard many times that the idea behind my strategy is that the price should break out of the consolidation with force and momentum, and that requires a spike of volume and volatility, which we got right down here and here. That momentum should carry the trade right from entry up through the first target, and that's the plan. Now, when it falters like this before it hits the target, and in this case, we ended up with a big drop. But oftentimes, we'll end up with sideways movement and maybe a new consolidation happening, which could break in either direction. When that happens, perhaps we need to consider a plan to shut this trade down before it even drops into the negative. As you know, there's a rule to shut the trade down once it drops back into the pattern. But when we see this kind of price action, and especially a huge spike like this, perhaps we need to consider shutting this trade down while it's still in profit and getting out of it with just a little bit of profit, and then looking for a new setup. I mean, once it does something like this spike and then starts to drop like this or goes sideways, it could easily go up and hit our target at some point in the future, but the probability of that drops dramatically at that point. So we might want to consider the trade done and then use our equity on something with a higher probability. To test this, I'll be looking back at all my prior trades to see how often this sort of thing has happened and what the result of it was. And that's my process for improving my win rate. I'll let you know my results. And obviously, at the very least, I should have shut this trade down up here rather than down here for a much smaller loss. Lesson learned, and I'm done with the pound New Zealand for right now. And the pound Canadian. This is almost the same story, isn't it? Big spike. Of course, we didn't get anywhere near as close to our target when that spike happened, but it did do the same thing here. I had an opportunity to get out right here, and I didn't take it. Now, this was a little bit more of a thoughtful decision because this big spike here made me think that maybe prices down here were getting rejected, and so I thought maybe this could turn from here, but I should have just followed my rules and gotten out and looked for a better opportunity. Ended up taking a full stop on this one for minus 129 pips. Again, lesson learned. Done with the pound CAD for now. And the Coca-Cola company closed back in the bear flag right here. Now it closed at the end of regular trading way up here. Then the aftermarket pulled it down here, but it was still way up here at the close. So I took the loss, 0.64 loss on this one. Done with the KO for now. And Microsoft Corporation triggered to buy on Monday right here. Pushed up to hit the target on Wednesday right there. And that is what I call momentum. Big bars right up there to the target. They should all do that. And of course Friday pushed down a little bit. I'm waiting for the PSAR to get up here above break even so I can start trailing stops on this one. Cryptocurrency Dash hit the first target right here on Tuesday the 22nd. Closed half for profit, moved the stop to break even on the remainder. Sunday the PSAR dropped down here to 149.0283-ish, and I moved the stop down, locking in 316.57. And that's all the active trades for today. Let's take a look at today's trade picks. Our first setup today is an ascending triangle on American Airlines Group Inc. It trades on the NASDAQ as AAL. An ascending triangle consists of a strong resistance level like this one here at 26, with several historical touches or approaches of the line, and a series of higher lows as fewer and fewer traders are thinking about taking this short. Each time the price gets back up to the resistance level, it chips away at sell orders until it finally breaks through. It should break out of the pattern with strong momentum. The ascending triangle is a bullish pattern, and I will only take a buy signal on it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see here. I measure the volatility using the average true range, or ATR. And here's our trade plan. We will buy a daily candle close above the triangle or above the 26 level. On the breaking candle, to enter a full-size position, we want to see the volume bar reach up to the volume average right there. If it doesn't quite reach the average but does reach 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume and dividing it by this volume average, and your results should be 0.75 or better. If you don't get at least 0.75, I suggest you stand aside on the trade. Stop loss is 1.5 times the ATR. First target is 1 ATR. So let's say this thing breaks up here. That's a wacky looking candle, isn't it? And about 15 to 20 minutes before the close of the market, set up your buy order. Look at your ATR down here, multiply that by 1.5, measure that distance behind your entry, and that's your stop loss. Measure 1 ATR above your entry, and that's your first target. If after entering the trade we get a candle close back inside the triangle, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I will only risk about 2% of my account on each trade. And that's today's setup on American Airlines Group Inc. Our second setup is a descending triangle on the cryptocurrency Ethereum Classic. A descending triangle is just the opposite of an ascending triangle, and it consists of a strong support level like this one here at 32, with several historical touches or approaches of the line, and a series of lower highs as fewer and fewer traders are thinking about taking this long. Each time the price gets back down to the support level, it chips away at buy orders until it finally breaks through, should break out of the pattern with strong momentum. The descending triangle is a bearish pattern, and I will only take a sell signal on it. And a good consolidation pattern, as before, should be accompanied by a decline in volume and volatility. And again, I use the ATR to measure volatility. And here's the trade plan. We're going to sell a daily candle close below the triangle or below 32. I'm not going to bore you with the whole trade management spiel again. Those details are the same on all my trades. If there's at least average volume, enter a full-size position. If there's only 75% volume, enter a half-size position, otherwise stand aside. Stop loss is 1.5 times the ATR, and the first target is 1 ATR. If you get a candle close back in the triangle after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. Again, I will only risk 2% of my account on this trade. And that's today's setup on Ethereum Classic. Okay guys, this is how I manage these trades. You do you, okay? Make sure you don't take any trades until you understand what you're doing and that you're comfortable with the setup. And of course, the other side of trading is the psychological side. And to keep a handle on that, I use my trading maxims. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. You guys know the deal. Use whatever tools you need to help maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 10, don't worry if you left money on the table, it's not worth the ulcers. Now, do you know what I mean by leaving money on the table? Now that could either be opening a trade late, which you should never do, or closing a trade early. Now I usually take it to mean closing a trade early, because that's something you never really know if you're closing the trade early or not. Perhaps you closed it because you thought the move was done and it went on to go way further than you expected. So what are you going to do if that happens? I mean, you've already closed your trade, right? Is there anything you can do? I suppose you could open it back up, right? But what if the move is done now, and when you open it back up, it just reverses and you lose everything that you made? The point is, there's nothing you can do if you've already closed your trade. Re-entering the trade, unless you've got a tested rule that allows it, is not going to get you into a high probability setup, right? A high probability trade setup is already gone. There will always be another high probability trade setup around the corner, so why waste your money on this low probability thing just because you're feeling bad that you left money on the table? I say learn from it and move on, find another trade. Imagine this. What if you continually hit winning trades but only made profit on half of the move on each one? I'll bet you would be way more profitable than you would be trying to get back into these trades that you closed too early, right? Think about that. There will always be another trade. You're only going to give yourself ulcers and indigestion if you keep worrying about things that you can't change. Remember our American Airlines Group Inc. trade plan for today. We're going to buy a daily candle close above the triangle or above 26. And our Ethereum Classic trade plan for today, we're going to sell a daily candle close below the triangle or below 32. For both trades, take a full-size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And that's it for today's video. Come back Wednesday, Friday, and next Monday for additional videos. They come out at 3 p.m. New York time, barring unforeseen circumstances. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below. Subscribe and hit the bell if you want to be notified of our videos in the future. Have a great week, and I'll see you Wednesday.